jobs for everyone. You get a job and you get a job and you get a job. So many of them are out there right now. Congratulations to the market for another amazing jobs report. Can't wait to discuss that and much more today on Money Never Sleeps. Thank you for joining us today, everybody. Before we get going, do us a favor. We ask it every time, and we appreciate it when you do. Like, subscribe. Nothing that Kevin or I say is financial advice, okay? We're a couple of guys hanging out in our mom's basements just talking about the market. So please do your own research before making any buys or sells. Kev, we got the jobs data this morning. Biggest monthly jobs gain in, I think, since May of last year. So coming up on a year. Blowout month in March, 303,000 jobs were added. Unemployment rate stays about the same. We saw hourly wages continue to be strong, 4.3% increase year over year, so outpacing inflation a little bit. Does this mean we don't need to worry about a recession? Economy's strong. The bull market is back on.
Go big or go home, right? I think that's the.
Yes, sir. I'm going to send it all in right now.
That seems to be the way that every single central bank, every single government is playing this market. Go big or go home or go bust. That last part, maybe that's what we're going to be watching. But yeah, I mean, that data that came out today, listen, guys, I think we kind of know what we're dealing with when it comes to some of this data. I do want to show one thing real quick. This is from the BLS. This is the employment situation FAQ. Look at number 2. Are undocumented immigrants counted in the surveys? It is likely that both surveys include at least some undocumented immigrants. However, neither the establishment nor the household survey is designed to identify the legal status of workers. Therefore, it is not possible to determine how many are counted in either survey. Now, I'm not making a political statement here one bit, but what I am saying is that this data has some discrepancies. There are flaws to how some of this is conducted. The fact that we keep reacting to this data that comes in better than expected, but we're continuing to see the private sector show signs of weakness where there are layoffs. And I do believe that we are going to see significant layoffs after Q1 earnings in the next month or so, as companies try and get lean to survive what could potentially be maybe not as strong of a 2024 as we were projecting back in last year, right? And again, it seems like the Fed at this point too is believing that inflation is going to be on the rise, and they're kind of just afraid to do anything because they don't want it to get out of hand. I don't believe any of this jobs data. I think this is kind of a thing that's just gonna, came out right before the weekend, let's pump the markets, and then eventually maybe they'll sell off. But I don't know, man. I don't buy it one bit.
We also saw that previous month's data was revised up. So, some positive news from that as well. A bunch of speakers are talking today. We see in the futures data that we're now at almost 50-50 of no movement in the rates come the June meeting. So the meeting on May 1st is all but guaranteed to have no rate hike, no rate cut, and we're heading in that direction quite quickly for June as well. When we look at July, that has also moved up to the potential of no rate cut there. I mean, the labor market is strong, so says these numbers. Hourly wages are continuing to increase. I believe, average hours worked are also increased by a little bit. Did that go down? I thought that went up by an hour.
I mean, maybe it gone up by an hour, but that's been going down significantly for the past 6 months.
Okay. Well, with wages going up and the job market looking very strong, the Fed is clearly in no rush to cut rates at this point, which, if you're holding money in some high rate accounts, I have a little bit to that, that's nice for me. If you're trying to buy a house or any other sort of significant purchase that requires an interest rate, it really sucks ass at this point. So Godspeed on that one. Kev, anything else from the data that came out this morning or from any Fed talk that you want to get into before we can head into a different direction? And I'm going to pull up, as you're talking here, consumer credit data came out at the top of the hour right when we started the show. So I'd like to take a look at that and see if there's anything noteworthy there.
Definitely. We got two things this week, and I'm kind of going back because we looked through it a little bit. We got the ISM manufacturing data along with the ISM services data. Now we're getting two different things here. We're getting told that manufacturing is increasing, right? And that same thing with services. However, when we look at the price of goods from the ISM data, there is no indication that the price of goods has been increasing for individuals on a consumer level. Is actually the lowest since March of 2020 that it's increased. All right, so that's something that we have to keep in mind because we keep talking about inflation coming back, that it's going to be a problem, and the Fed are too afraid to cut too early. Otherwise, that's going to increase again. So what we're currently sitting here is this kind of stranglehold that the Fed is keeping these rates at elevated levels, and consumers necessarily don't need to be experiencing currently with the price of goods that have come down since 2022. So now that we're back at 2020 growth levels, the question is what happens if we continue to keep rates this elevated, right? Well, it's even harder now because we're talking about oil, and that's problematic for consumers on a daily level getting to work. Products are continuing to be created, which could be inflationary in itself. Oil is inflationary. It also is something that's going to probably cause a lot of problems in the labor market. I think it will cause a shock in the labor market if we continue to push the oil price up and then we're just not seeing demand there, right? They're going to have to lay people off. But that data itself is telling us that the price of goods is not increasing. So why are we having rates still? And this talk that we're not going to have any rate cuts possibly till next year, even from some of these Fed speakers, and then we're going to see inflation come down to 2% by 2026. We're talking in circles about nothing. It makes no logical sense what we're doing here and what we're listening to the Fed. At this point, we're just kind of reacting to what they're saying, and they're playing with the market in a way where it's very manipulative to how people are reacting. So I had a problem with looking at that data. No one's talking about it. Everyone's talking about the manufacturing because it's better than before. It's slightly better than it was last month. But that ISM data about how much the prices of goods have increased is so key to our battle with inflation. And it shows that it's kind of over at this point. Everyone who's saying that we're stagflation or we're going to get to a point where it's going to roar again, completely misguided.
All right. I'm looking at this credit report right now, and it's, nothing stands out too noteworthy. It does show that consumer credit amount of debt has actually gone down a little bit month over month, which is not a bad thing. About $12 billion. So maybe we're heading in a good direction on that one. What else, before we get into TradFi? I think TradFi is pretty interesting. We're seeing a lot of movement there. I woke up to seeing crypto down, and I was expecting, it to continue to head in that direction with the jobs data, but that was not the case. However, TradFi is rallying very, very strongly today. The rally seems to be continuing. We're back on. Bull market is here. Load up and let's rock and roll.
Seems like it, right? But let's get into the bank term funding program right before we get into TradFi, right? We know that they have to pay this back, and it's been 3 weeks since the date ended, right? We're in April 5th now. So roughly this week, it should have been about $14 billion that was supposed to be paid back. Got the data out last night. Only $2.34 billion was repaid. So we have to ask ourselves, what is going on here? Is it a lot of money to the Fed, who we know is having that can pretty much absorb all this? It's not necessarily a lot, the amount that's in the bank term funding program. But the thing is, they lost the collateral that they posted, which was bad collateral already, and they're not paying it back. Why are these banks not paying back the funds that they got? Is it because they're kind of hurting? The question is too, we have to look at the Fed's discount window, and when they're borrowing from the Fed at the last resort, if that continues to increase, then we have a problem here. That means that there's not enough liquidity, not enough collateral in the system. And that's the thing that can kind of call bullshit on all of this. And I know I'm speaking very frank here, but this is what we have to watch, because this is the thing that they're not going to promote. They're not going to talk about. I mean, the fact that last week was a miss by $19 billion and this week is another miss by $12 billion in terms of what should have been paid back. They should be on the headlines everywhere. I mean, was the banking crisis last year not a big deal? It was fucking huge, right? It was huge for those 2-3 days that was really problematic. And even into May, when we saw that Credit Suisse went into receivership, or not receivership, but was taken over by UBS. It's like, is this not important anymore? Or is it just we don't want to make this as big of a deal as it really is? But this should be going down same way it's been going up, paid on time. That collateral is just absolutely being eaten up by the Fed. And then we have to question too, is there a problem with collateral and these people need money and they can't put up collateral to get that money out? that's an even bigger problem that the banks could face that we're not talking about amidst the CRE entire dilemma that we're facing with a lot of these regional banks. Question is, how long can this last, right? Because a lot of that money came due in the first few weeks, and we're just not seeing that being paid off. We had a good amount the first week, second week was a miss, third week is a miss. If we keep seeing these misses, I believe that we are going to start seeing a lot of problems in the banking system where we could see some of the smaller banks that are the weakest links start to go, whether it's the receivership or people start acquiring them. That's going to be the play, but I think that we're not very far off from finding out what happens with a lot of these banks and their liquidity.
All right, let's look at TradFi now. We're seeing S&P up 1% on the day, NASDAQ 1.15, the Dow is up 0.75. VIX is also up on the day, just a little bit. So kind of weird on that one. Dollar is hanging strong at 104.3. Tech rallying pretty damn well here. And it's the usual suspects. NVIDIA up almost 2.5%. Netflix up 2.75%. Meta almost 3% up on the day. Tesla still struggling. That one has been getting beat up pretty good. We can talk about Tesla if you want, because I mean, if we look at it from the height of where it was in, let's see here, around this time last year, actually July of last year, or even more recently in December, we see a significant pullback there. And I'm wondering, at what point does Tesla become a buy? Currently down 37% from December.
Definitely. And I think the problem with Tesla right now is that they missed on their orders promised. I think it was like 300 and something thousand. They were expected to deliver like 400,000 models of their vehicles. You're way below the 250 on the daily, right? If we look at this on the weekly, we're getting close to that death cross. I think there could be a chance for a rally here because this is a level of support where we currently are, could bounce, but you're pretty much hoping that it reaches the 200 EMA or the 50, and maybe that's a little good swing trade there on the weekly. I don't necessarily know if buying any of the tech stocks right now for the long haul is good when we're in the stock blackout window, because that means that we could still see further push down because no one's necessarily here to keep pushing the price up. And even though we're seeing a great move today in some of these tech stocks, we have to think about this from the perspective of, a lot of these companies that own a lot of this aren't necessarily buying in. So what you're seeing is a lot of hedge funds chasing this price down because no one's buying it up from them. So they're spoofing the market up, not necessarily spoofing it. That's maybe a poor choice of words, but they're getting the market up pre-market, and then they're offloading it as the day gets closer to the close. And we kind of saw that again today. It was up, all the way to like 65, then shut down to 44 today in the S&P. But for Tesla, level of support, we're currently at it. This was a target that we talked about several times on the show. We're there on the weekly. We look at this on the monthly. We're going to get to the oversold fairly soon. I think that maybe by the end of this month. I mean, it seems like that's a given. But there is a huge gap between where we are right now at 165 and 103. Now that's my big question here. It's like, do we get there? And if we look at this on a larger time frame, is this a head and shoulders on the monthly? Shoulders, head, right shoulder, and then we break down. Does that get us to their $64 target? Maybe. But I do think that there is that range that we talked about a long time ago where Tesla might be a bit of a buy. And for me personally, that's between 103 and 65. So this little sweet spot down here, I know it doesn't seem like it's going to get there, but a lot of people also said that Tesla was going to rally to like 300, and it didn't, right? Tesla's probably the weakest of the top 7 stocks.
Correct me if I'm wrong. Kathy Wood's price target on Tesla is like 2,000, right?
Yes, sir. Yeah,
okay.
It is 2,000, and Bitcoin's, I believe, is like $1.8 million.
I think 3.8. Sorry, 3.8.
You're right. You're right. 3.8.
Yeah.
Because I forgot that the United States is turning into Argentina.
Yep.
That's the only way you're probably gonna fucking see that, but at least in the short term. But yeah, this is our range. This is our level that we've talked about for the longest. I've been bullish on Tesla at $64, but obviously you're not going to be able to buy the bottom, and you never know if it's going to go that deep. So keep an eye on this range here. I do think that there is something coming. I'm not going to say a black swan event, but I do think that there is an equity pullback. And even though Tesla is fairly oversold here, there's a good chance that it just can continue to go down, right? If no one is buying some of these vehicles, and then there's just investors who are thinking that, okay, well, maybe there's a better play I can put my money in. Maybe it's NVIDIA or whatever, one of those, then maybe that's where they're going to flock to. But Tesla, I think that small bounce in the short term, eventually it's probably going to come back down to like 105, which people are probably shitting themselves saying it'll never do that. Give it 4 months, 5 months. We'll see how bad this market does get. But let's
It has
talk
been a
about
rough time for electric vehicles, that's for sure. Ford, I mean, all the Ford, the Mustangs, their pickups,
yeah.
everything going well below MSRP. Like the desire for electric vehicles is not there right now. Part of it price, part of it convenience. We'll see. I'm not sure what it's going to take for that to flip, but go ahead and talk about the S&P.
Yeah, probably $240 a barrel for oil. Coming soon. But yeah, look at this on the S&P. We talked about this breaking out of this channel, and I said that this is probably over. We also said that the height of the S&P was probably put in back in March. I am somewhat hesitant to say that, that could have been the heights, even though, it seemed like that was a pretty good level. The reason I say that is because we are roughly, I think, like 10 to 12 days outside of OpEx. And I do think that OpEx could be the one last rally we could see where the market just decides to push up. And I think that could be a scenario. But the thing I have a problem with is volume. And I've said this several times. If you look at the volume today, it's down here. It's kind of hard to see. Let me see if I can pull it up. Right down there. Yep. The volume down there is telling me that there is a lot less buying volume than there was selling volume yesterday. So if you're not able to push the price up higher, people that are up here that aren't seeing that buying volume come in to push their price higher, they're going to do what they did yesterday and sell off, right? And that's kind of the situation that we're in. Now we're kind of oversold on the daily for this S&P, right? There's a good chance that we could rally, and that's why I think that we could see one more push up, maybe try and get back into this range for the S&P before OpEx. It's going to be harder because the blackout window for a lot of these corporations, they can't buy the stock back. So you would have to be pretty much anticipating that there's just going to be an entire market sentiment move where they're going to push the price up for OpEx, and then maybe you start to see some of these contracts get closed out, and then we're kind of in this 2.5 week lull where anything could potentially happen. I think the conditions are perfect for any of this, but the key thing that we're going to want to watch, if that's the case, where the market starts going up from here, is the stochastic RSI and how quickly this starts to get to overbought. Right, that's going to be the key metric, in my opinion. That goes for the Nasdaq, the Dow, the Russell, all that stuff. I do want to show the dollar though, because this is something that we have to talk when we talk about the stochastic RSI, why it's important to watch this sometimes, even if we're getting a big pullback in the short term, why this could absolutely reverse, shortly after. So we were nice and overbought for a period of time, started climbing, right? We started getting some pullbacks, right? We pulled back pretty good. I mean, it's from 105, we went all the way down to 103.95 and we bounced. Now we're sitting roughly around 104.3. We're going to start to see this get really close to oversold. And once again, we're oversold, but we're still above this major purple line of resistance, which for the time being is acting like support. It acted like support yesterday. If that's the case, then we're probably looking at another leg up to see if we can test prior resistance, which would be 105.659. And if that breaks through, because we probably have enough momentum to push to the upside, it probably would, align with an equity market sell-off. We're looking at 107. We're looking at this level of resistance up here. And what does that cause? That causes a lot of problems in the equity market. It also causes a lot of problems for things like gold right now that are absolutely rallying, right? We talked about it a few days ago. Let me see if I can find gold. Talked about it a few days ago about this level of resistance up here. It would have been nice if it absolutely just got rejected right off the tip of it, but it's a little bit above it right now. Where it closes is going to be important too. But again, I just want to do for reference, it's going to take time. We're going to have to see how this price plays out, because if we look back to the prior time back in 2011 when it did break above it, we had a wick above it, came right back down, tested again, got rejected. This is for the most part acting as general resistance, and then you saw what happened. Obviously, had to find price discovery, consolidating, correcting for a while before it finally did decide to go the trend of the market for quite a few years. But right here, I do think that we're getting close to a top in gold. Gold sells off once the market starts to sell off with everything, and it starts to rally once again when you start to see QE, because people are uncertain, and also because banks aren't issuing as much debt. It's kind of the reason why gold will rally. But up here, people are buying. It's also the top, so I think a lot of people are buying, and everyone buys the top, and it's kind of a crowded trade. It's going to be one that we're going to watch and see how that plays out. But once gold starts turning, the dollar is going to start rallying, and the problems that will cause, globally are even worse too, right? We talked about the yen, still at a really tricky spot. Above 151.75 is danger zone. We don't want to see that. We're only about 15 cents or so away from that, or 0.15 yen away from that. You look at even the euro here. Euro looks like it's going to go down once it gets overbought, in my opinion. I think it's going to continue with this pattern, which would only make the dollar stronger and put more pressure on the equity markets. So it's a really interesting scenario where we're looking at from Asia, Europe, how the currencies are absolutely attacking each other at this point. And it's not too long, in my opinion, before we start to see that bleed into the bond markets of a lot of these countries. And you're going to start seeing a lot of these countries offload debt of other countries to protect, their own debt and see if they can survive if there is a type of currency warfare that we're having right now, especially if something global were to also cause problems too, like say something like in Europe comes up and it causes the euro to drop significantly, then you're going to see possibly the yen and the dollar race to the top, as both of them are probably going to be extremely valuable, and you'll see their equity markets pull back.
All right. Good coverage on that. Let's end with crypto on the day. Everything's getting bought back right now. We see that Bitcoin is kind of getting some of its losses back around just under 68K. ETH recovering at 3,300. Sol just under 180, so a bit of a bounce on that as well. But what is catching your eye? I know that you've been discussing Bitcoin dominance is back in the mid 54 range, and we still see a good amount of movement with the stable coins as far as their dominance goes.
Absolutely. And we did see a pretty good pullback last night as Bitcoin dominance climbed, right? We saw, I think, Sol, which was trading a few days ago at like 195, it went as low as like 173 or 71, I believe.
168 it wicked down to.
Yeah, we'll see. That just kind of shows, even though Bitcoin's price was coming down, just because it was bleeding less fast than other things, the dominance kept on growing. And that just kills those Bitcoin, the Sol pairs, Bitcoin, ETH pairs, whatever you're trading, or it would be ETH to BTC, Sol to BTC. I should have said it that way. But that's problematic because then you start to see that it will eventually get to the fiat pairs, which it probably will soon. Bitcoin, let's just look at this on the macro here. There's two scenarios that we're looking at here, right? Obviously, I think this is a double top, but the question is, are we going to test this level of resistance one more time? And if that's the case, then maybe it isn't a double top. Maybe we're looking for a breakout. I'm going to remove this line here, but we know that this yellow line here was acting as a level of resistance support. We're closing above it. We tested below it and found support there. So what I'm potentially seeing is maybe one more push up for Bitcoin. I am not married to this one bit. You guys know that I really don't think that we are getting to a point where it's going to make sense for Bitcoin to be up here. Obviously, with terms of liquidations and stuff like that. But the reason I'm saying this up here is because we know that the halving is coming fairly soon, right? I think April 20th or something like that. Somewhere around that time frame.
Yeah.
And that's kind of where we're looking at the end of this ascending triangle, or this pennant where it ends. So I could definitely see us just coiling up in here. Fucking halving happens, shoots up, I don't know, 78, 80,000 maybe. And then we just get a mean reversal right after that. That would be what I anticipate. And the reason is obviously because we're looking at the price going up. Meanwhile, we get this nasty bearish divergence coming down as the price is going up, right? So we have to keep that in mind. And we also look at, where is it? Do I have it here? No, I don't. Fuck. I got to add that to the chart. USDTD. Sounds like I'm saying STDs. It's hugging this line for right now. It doesn't have to break out right away because, as we've seen in the past, it can stay here for a period of time. It stayed here from February, technically January, all the way till around May of 2021. So that was about 4.5 months or so. I mean, this could stay. I mean, this got here in March of this year. I mean, we could stay here till after April. And then once we get to like May, that's when it starts to increase, which means if USDT dominance is increasing, you're definitely seeing a sell-off in the equity market, or not in the equity, in the crypto markets. And looking at total real quick, this is doing something a little bit similar to Bitcoin, but also a little bit different. We got to see if this level of support down here holds. It's this line that we're kind of looking at. If we start closing below that, then I think it's game over. We probably won't see that scenario, that pennant that I was pointing out where we push to the upside. But it's also possible that it does happen, but alts just bleed so much that we still start closing below this. We're looking at total 3 here. This one is looking very bare here. It's this level of support. Let me see if I can get it. Level of support there. We're finding resistance on it right now. So it could be the case where Bitcoin just shoots up and then, it's just a flow of capital that goes from alts to Bitcoin, and this just absolutely tanks. And maybe people are going to start putting money into alts after the halving because it's kind of the way it is. They front run Bitcoin and then they just see the flow of funds into other assets. I don't necessarily buy that because I think that there's a lot of weakness here. And with dominance being so strong, I don't know if that dominance would yield to alts to allow them to run up, right? I think the Bitcoin halving is the last thing in kind of in this calendar year that we could look to for Bitcoin and other and crypto entirely and say that, okay, this is probably the biggest event that we will see. You could argue an ETH ETF, but Gary Gensler seems like he's very adamant on not approving that. If he would have approved it, it probably would have been already. So it probably seems like they're going to fight this one a little bit. So I think the halving is going to be the big one, and that comes roughly around the same time as OpEx, which is ironic, right? Everything's lining up for that April 19th, April 20th, and if that's the case, then following that could be an absolute problem. But to get there, just so everyone knows before we wrap up, you are probably going to see some volatility. Volatility is going to come into play. We're seeing it. Right, it's up today. It's 0.212%. Oh, just went negative. But for the most part, it's way higher than it was below this range. But you're extremely overbought on this, and I think people are getting scared, so they're buying that insurance just so the trade doesn't unwind. Don't be surprised going into OpEx. You see the VIX get absolutely crushed down to these levels, maybe this white line here around 14 or so. That's very possible. And then right after that, you could see it absolutely pop off. So if you are going to play this, I'm not probably going to do anything, but if I were to play it personally, I'm probably going to wait to see if it gets down to this level here. But I definitely think that the volatility is going to spike significantly. Seeing it go to 1634 and staying here after a day, even when the markets are up today, it's telling me that people are definitely betting on the VIX, probably in a big way in the short term, at least. So that's all I got. I know I just ran through a bunch of shit, but there's definitely conditions perfect, and it's so interesting right now because anything can go either way, and it can definitely fake people the fuck out in this market. And that's probably the most fun that we could have outside of the market just going up or down significantly. Fake outs, I love them, and they keep everyone on their toes and they keep people honest. So that's all I got for that this week.
Once again, constant vigilance. That will wrap it up for today's show. Thank you, everybody, for being here with us. We'll be back on Monday to discuss what will be happening in the markets. We got some inflation data next week, more Fed speakers. Should be a good one. We'll be closer and closer to the Bitcoin halving second by second. So can't wait for that. But if you've not yet, yep.
Nothing I say is financial advice. I forgot to say that before the Bitcoin. How would I play the VIX and shit? So I just had to say that.
Okay. Yep, that's legally binding. All right. Thank you, everybody, for joining us. If you haven't yet, like, subscribe, comment, share us out, whatever. Have a great weekend. Stay safe out there, and we'll see you next time.
Take care, everyone.